We have got you your ADP payrolls report with an upside surprise at 253,000. That is the print. The estimate was 180,000. The previous number was 177. We've got used to this over the last few months. A few of these big upside surprises. Are they outliers? Are they any indicator of what the main course will bring tomorrow in the payrolls report? But the market's on a move. Treasury yields up 3 basis points on a 10-year. A firmer dollar off the back of it. The DXY up by about 0.4%. Is good news for the equity market. Let's bring up the futures board just very quickly for you. Futures still positive, stable, not really going anywhere. The reaction you do see is really at the front end of the curve on treasuries. Yields pushing higher across the curve on 2-year notes. We're up a couple of basis points now to 1.2997, 1.3, pretty much flat. That's the story of the bond market. The read across for the FX market, a stronger dollar story off the back of a big upside surprise on the ADP report. Alex Steele.
And we are less than almost 24 hours away. We got Simon Derrick, BNY Chief Currency Strategist, joining us from London, and Ethan Harris, Bank of America, Merrill Lynch, is still with us. Where are these workers coming from? Like, let's pretend that the ADP number plays out tomorrow's jobs report, right? Where are they coming from?
Well, I mean, the labor market is strong.
But if it's tight, why are we adding so many workers?
Well, part of what's happening is that discouraged workers who abandoned the labor market have come back in, and so that's kind of giving a little more room for growth. We still have an unemployment rate of 4.4%, so there's still there are people out there available for work, and demand is strong. The labor market is one of the areas of the economy that really hasn't slowed down and still looks pretty healthy.
Simon, we talk a lot about sort of what's going to make the dollar bull happy. When you see the DXY just up 0.4%, what's it going to be? Is it going to be continued growth in the jobs world?
Well, I think if you look at what's driven the dollar over the course of the last 12 months, it's actually been the yield curve more than anything else. Typically, when you've seen the yield curve steepening, you've seen the dollar higher. So we're talking about future expectations for growth and future expectations for where we're going to go with inflation. Then maybe that's the story. But at the moment, at least, it's actually been one of a yield curve flattening, and that's been dollar weaker. Whether this changes that story, I think we kind of got to wait till tomorrow and see what the actual NFP number comes out at.
Ethan Harris, let's talk about that. Is the ADP report any kind of indicator as to what the NFP number will look like tomorrow?
Well, I mean, economists got burned in the past by taking it too literally and trying to translate it straight into the non-farm payrolls. But I do think when you get a big surprise like this, it creates upward risk to your forecast. So consensus is, what, about 180,000 in payrolls? So with this kind of surprise, maybe we get a 200 number. I think that, you know, you have to give a little bit of weight to this.